this year versus 2011. So why I picked 2011? So pretty much is just from the breadth thrust alone, because if you recall, I think about 4 or 5 sessions ago, I talked about the breadth thrust actually just hit the critical level, went from oversold, like below 10%, and then all the way to above 90%. So I think that is very significant according to the history. However, I also found that recently the breadth thrust just dropped significantly. So will that actually cause the problem? And that is the thing that we'll need to discuss. So obviously 2011 is the bullish case, because we all know what happened after the stock market just keep going up after the consolidation or the short-term accumulation. So breadth thrust and the market structure is the thing that we need to compare and find out what's different for this year. So this is just a recap from session 50. I think this is probably the third time that I show you the breadth thrust. Just quickly, this is the COVID low. This is the 2018 Christmas sell-off. So we know that there's a sell-off, there's the COVID low, and that is just when the S&P 500 is on its way up. It's about 41.30. So that's from session 50, about 5 sessions ago, probably like right about 1 month ago. And we notice that is about 76% for the 50-day moving average. So it means that there are around 76% of the stocks above 50-day MA. Okay, so next is actually from 2009, so 0809, so that's the global financial crisis. We also got that, sorry, it's like from the oversold minus 10% go all the way into like 90%, and for 2010 as well, this one is a zigzag mode, but still it's from the oversold going into overbought 90%. So all of this actually mark the bottom when it actually hits the 10% level. And next is the one that we are interested in. So this is 2011. So, and also 2016. So in terms of 2016 is still pretty much not too bad. So we see that rightly here, it's just have a short-term pullback, subsequently just have a reaction. But in 2011, this is really something. So it's sort of like uptrust, very similar to the current situation right now. So it's just a very short-term temporary commitment and then followed by a very sharp pullback. So it's the pullback actually hit about 20%. All right. So the most important thing is the magnitude of the pullback of the S&P 500. So this is quite a significant pullback, which is also mimicking the current situation now. So if you check the previous slides, so all of this breadth thrust actually did not show this sharp pullback. So like in 2010 or the global financial crisis, at least for maybe a few weeks or months, it's sort of holding up. And here as well is holding up. And also previously, this is like 2019 and also COVID low is sort of holding up here as well. So it did not really drop too much, like below 50 or 40. So unlike the current situation and also 2011 as well. So that's why we want to compare the current situation together with 2011 scenario, because I just find that this sort of the sharp pullback is just very similar to what we are having right here. So similar to the magnitude of the S&P pullback as well. All right. So this is 2022. So this year. So what are we getting? So instead of holding up the gain for the breadth thrust, it's sort of just have a temporary commitment right here above 90% and then go all the way back to, at the moment, I think it's around 33%. And bear in mind that this is only a daily chart. The chart that I showed you previously are all the weekly charts. So this is definitely a temporary commitment. So it's very much similar to 2011 scenario. And in terms of the magnitude of the pullback, at the moment, you can see it right here is just less than 10%, 9.8%. So the pullback is considered quite sharp and deep. So unlike the other events that I show you, but in 2011, this is very similar. All right. So next one, let's take a look at the structure. Let's compare this year and 2011. Okay, so this is 2022 this year, and the bottom pan is actually 2011. So you can definitely tell that there is similar structure, but there are a few things that we need to make it clear first. So first of all, the context. Is there any capitulation this year? I don't really think so. So we're still lack of the capitulation scenario. But in 2011, there is certainly the capitulation scenario. So where we've seen there's a very bearish spread, a huge bearish bar, and then a lot of gap. And then eventually we see the acceleration to the downside together with the spike of the volume. So this is definitely the selling climax, the capitulation scenario that everyone is looking for before we can call a bottom. But for this year, this is sort of like we got a distribution top right here, and then we got a sign of weakness. So this is a distribution set off, and then we have a redistribution. So this is an uptrust after distribution, and subsequently breakdown, and then eventually we sort of got a localized climax, but not so much about the capitulation. And we have this trading range. So far, this trading range is still working, and we can still say that, well, it's still consolidating within this trading range despite the failure right here. Okay, but for 2011, this is certainly a capitulation scenario, and then followed by a base building. So this is a accumulation structure. So if we compare to this move, okay, this is a sign of strength rally. So this is also a sign of strength rally, but it sort of just become an uptrust because it fails. So this sign of strength rally actually show some strength. So if we compare the strength, first, I just want to say, well, this is a kind of selling climax, and this is a little bit of the spring, so just a temporary commitment below. But this year, we got a sign of weakness. So we create a lower low right here. So this is a weakness by itself for this year. And here, this is a very clear uptrust. So it's just maybe slightly more than a week commitment. So more than a week commitment, maybe less than 2 weeks commitment above, and then followed by a failure, break back in, break back down to the trading range right here. However, if we check 2011, this whole chunk right here is actually definitely more than 2 weeks, probably around a month. So consolidating, so trying to holding up the gain. So this is another strength by itself. So I would say that in general, there is strength in 2011 structure compared to this year. However, if we look at this, this is also a failure, despite there's strength showing up, and this is also attempt to holding up the gain, but eventually it's just fail. Especially it's quite obvious on the Jackson hole, where after the Paul speaking, then we see this kind of the big bearish bar, so the commitment bar to the downside. So the magnitude to the downside is sort of similar. So we got around 11% pullback from the top in 2011. At the moment is slightly less than 10%. So if we compare to the peak to the bottom, so at the moment I still assume that, well, this is sort of the low that we have, possible the bottom. So it's like minus 24%. And in 2011, we got around minus 22%. So it's very much similar in terms of the magnitude of the pullback or magnitude of the market correction. So right now, just by looking at the structure, so I would say this is trading range. This is the trading range this year. So failure happened. So this is also failure happened. So uptrust followed by a failure, break back in, but actually forming a higher low. Supply has been decreasing. So this is definitely something's different. So supply has been decreasing on the pullback. Here we got localized increase of the supply, but in general, I think this sort of the volatility also mimic probably here slightly less than this, but definitely comparable to this portion in May, which we'll talk in detail shortly where we go through the market outlook. So definitely from this chart, we can see that the structure is very similar compared to 2011. But we all know that this ultimately formed a last point of the support. So after that, after the reaction, we got a test. So the test comes with a higher low. So after the successful test, then the rest is the history. And then we got a breakout and then eventually just keep going up. So 2011 actually, here's the bottom. And then this is a sign of strength rally followed by a last point of a support. But this year, we got still a potential sign of strength rally, but I think the pullback is probably a bit too steep, too sharp, and with that much increase of the supply, which I would talk more about the analysis in terms of the price and volume. But so far, this is another analog that we can refer to for the bullish case. Okay, so this is still a bullish case. So don't be too bearish, because in terms of the magnitude, I think it's still comparable, like below 10%. Here is around 11%, so it's still not too bad. So If it breaks below, then I think that's a next level. Okay. All right. So this is the analog that I want to show you, because in terms of the market breadth, it shows a lot of the similarity where the market breadth actually just shoot up to 90% and then have a very quick reversal drop all the way for this year is at the moment is around 33%. For 2011, it dropped even further to around 20%. So the magnitude of the breadth thrust, the pullback, is a lot worse in 2011. But at the moment, the reaction for this year is still unfolding. So it's probably still a bit early to confirm or to jump through the conclusion. But just want to keep you thinking about this is one of the bullish scenario that we can refer to. Okay, so let's jump to the market outlook and let's talk about the bearish case and also the failure case, because this is obviously a bullish case. So instead of just thinking about the bullish case, we always want to have another backup plan. So what if everything failed? So how would the failure look like? So that's what we want to discuss in the market outlook. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.